Good morning. It's 11:05 a.m. Do you know where your home equity is? Welcome to the Velocity of Money. Here now to answer your questions about real estate, capital, equity, funding, and finance, your host of the Velocity of Money, Michael J. Barnes.
Welcome back to the Velocity of Money. It is New Year's Eve and the day is almost over. Bill O'Reilly's coming on here in just a few moments, but for right now we have Dan Havey with us talking about loan modifications. And this segment we want to talk, Dan, about the specifics, the actual mechanics. How does it actually work for the homeowner? And let me just start it off, and if you will, we'll let you explain the back end on how it works.
Okay.
Important to point out here, this is one of these things I don't talk about all that much. There is no upfront fee by us or Velocity Financial. We do collect a retainer for the attorney, but that is not for us and our firm. Our job is to determine where you're at now, be very specific about where you're at with your mortgage now, what the rate is, what it's done, those specifics. How much do you make? We have to help the lender with one thing and establish a hardship that's crucial to this. You can't be making $500,000 a year and paying $5,000 a month on a mortgage, and they're just not going to lower your interest rate because you want it. There actually has to be some sort of change, financial change, hardship. We determine that, and then there's a significant amount of paperwork involved. Velocity Financial takes care of that for you. We fill out that paperwork, obviously along with your help. We review all of the documentation. We then recommend the right loan modification, whether it be an interest rate reduction, or extending the term of your loan, waiving some of the balance that you owe, which is very, very rare, but nonetheless, that's what we do. And to make sure that once we're done with this whole process, you can sustain and live in the house and be happy forever. We do. Go ahead.
Now, the process itself, so what you're explaining to me is really not much different than what people went through when they got their loan in the first place.
That is correct. There's, it's kind of funny, but it's a little bit on the reverse of that. But yes, the steps are the same. The paperwork that we need to collect essentially is the same. Some of the differences are, we don't need to do an appraisal. We do get the value of the property to see where you're at. In most cases, people are underwater with the value. We don't do an appraisal though. There's no credit, analysis. We review your finances and these sorts of things. But essentially, yeah, just like doing a loan, what we're trying to do is determine what it is that is sustainable for you.
So what we do at the modification hotline at Velocity Financial is to put together the entire package, just like we would put together for a loan package. And because essentially we have to send this to an underwriter. It's not known as an underwriter, but it's known as a loan modification coordinator. But at the modification hotline, we're the first set of eyes. We work with you directly, getting all the paperwork in, getting it put together, because we know exactly what has to be in that file, how it has to be stacked, how it has to be presented before it goes to the loan modification coordinator who works for the attorney. Then once it's at the attorney's office, at the modification coordinator there, they take a look at it, they make sure everything is in there, they make sure it's a doable modification. This all happens before it is ever presented to an attorney. Is that correct?
Yeah, it is correct, and that's the key. And it sounds like there's a whole lot of steps. So there is a lot of paperwork. The process, like you said, very similar to a loan, with the exception of the different costs of the title company and all that other stuff. Those don't exist. We don't charge the upfront fee. We do collect a retainer for the attorney. At some point during our process, we make our recommendations, we turn it in, and then the attorney does their due diligence. And that's where we really want to real quick, not real quick, I want you to explain what happens and what it is the attorney's looking for.
Well, this is where it completely goes off track versus what a homeowner would do if they're doing their own modification, because they would do everything that we just talked about. They would fill out the paperwork, they would get together tax returns, pay stubs, whatever the lender wanted, and they would present it all to the lender. Now, they probably wouldn't know exactly how to stack some of the paperwork and how to calculate some of the things that we know how to calculate, but they would put all that paperwork together. Where the difference comes in is once it gets to the attorney, because the attorney ultimately wants to get you a loan modification, but he can't just call up the bank and say, hey, I want a loan modification, because he's going to get the same result you did. So what he has to do is he has to go through the file and he has to look for things like, and I'm going to use a bunch of acronyms here. We're looking for things: ATILA, RESPA, HOPA, HUD, all these different guidelines that the lender was required to meet while giving you the loan. We have to check to see if all those things were done properly. Then he will send a letter to the bank explaining that that's what he's doing, that he may or may not have found any violations, and that he is requesting certain documents from the bank. As we talked about in an earlier show, one of the things he's going to request from the bank is that they produce a copy of the note, because if they don't have a copy of the note, they legally can't be foreclosing on you in the first place if that's where you are in the foreclosure process.